Okay, cool. Record. I'm just going to do a quick little webinar. I'm just on my own at the moment. I'm just doing a video actually on Fibonacci. What I'm going to be doing today, purely because I've done a Fibonacci video about 6 months ago now. Obviously, I've improved since then, so I feel like I need to update that. So again, this will be on Fib today. I will send it out to the group chats, and obviously watch it, take notes, get a chart up. Because I feel like getting a chart up is the better way rather than taking notes and notepad. That's me personally. But again, you just got to find out what works for you. And from there, boom. So let's get started. Fibonacci is obviously my favorite. It's how we catch the pullback, and then we catch in the buy or the sell off the pullback. This is how we get good entries. This is how we don't have to be constantly looking at our phones, which obviously I don't want to be, although I'm always on it. I don't want to be constantly looking at charts and all that stuff. So again, it's just completely up to you. Whether or not you want to use this tool, obviously. Test it out, see if it does work, but 9 times out of 10, everybody I've showed it to does work. And it's obviously elevated their trading style completely. So again, right, rules of fibs. So it's like rules of trading, there's rules to fibs as well. So rules to fibs. Boom, let's get started. We're using it in trending markets only. By that I mean uptrending, downtrending only. All right. Do not use this. I repeat, do not use this for a ranging market. By that I mean consolidation, whatever you want to call it. I'm sorry, I can't spell consolidation. See out. Ranging, obviously it's a bit ranging, and again with fibs, right? So uptrending, downtrending only. Emphasize on only. Do not use this on this, otherwise you're going to hit stop loss constantly. I can promise you that from experience. So again, with uptrending, right? These are all rules that you need to follow. Uptrending, we pull it from the high low to higher high. Not GG, not trading pod. And downtrending, we're pulling it from the lower high to lower low. Again, this is the rules you need to follow when using Fibonacci. And I'll show this on the charts. You saw on the previous chart on Euro USD, and there's lots of circles, there's all these zones. Obviously, you pick that up as you go along, but again, it's just this type of strategy works for me. It works for a lot of other people, so I don't see why it won't work for you. So again, you need to follow these. 100% need to. So let's get started. So again, let's do this. So I'm going to draw a very basic uptrend right now. This is terrible. I'm never good at art. Just trying to adjust that. Okay, cool. So again, with fibs, right? You see, I do a lot of circles. The reason I do the circles is because I'm marking at the high highs and high lows in the market. This helps me just judge whereabouts fib needs to be. Plus, it looks nice, and obviously, that's how I like my charts. And I've always got used to it. It's like a habit. So you see, with fibs, right? Fibonacci. We pull it from the high low to high high, meaning we pull it from the low to the high, and we try and buy between the 50 and 618. These are my settings for fibs. You can copy them, you can do whatever. But again, the main ones we need to actually focus on today is the 618, the 50, 38.2, sometimes not as often, the negative 27, the negative 618, and the negative 23 if you want to. This is more of an institutional kind of TP. It's up to you whether or not you want to use it or not. But again, the negative 27 has always done well for me. So it's entirely up to you whether or not you want to actually do that or not. Right, so you see how right now I pulled it from the higher low to higher high. These are the rules. So these are the rules you need to follow. Again, you can copy these, change colors, pink, yellow, green, turquoise, whatever you want to do. Make sure reverse is off. So this is on, check it off. Otherwise you're going to confuse yourself like hell. So again, we pull it from the higher low to higher high. I'm obviously going to show this on the chart just because if I draw it like this, it looks very simple, but on the chart it's completely different. So again, let me just turn negative 23 off. Negative 27's worked for me so far. So we pull it from the higher low to higher high, and we aim to buy the pullback. So we aim to, when it pulls back, we aim to buy it between the 50 and 618. The reason I do this because of this specific reason. So if I pull up my Fibonacci right now, right? Again, wherever the negative 27 is where your TP is. So this is going to be a buying fib. So the fib would be doing something like this. So we would be pulling it like this, from the low to the high. We're aiming to buy the pullback, right? The reason I buy normally of the 618 between the 50 to 618 is for this specific reason. So I'll show you an interactive way. See how the 618, right? If we put the buy, we put a little buy tool on here. So again, long positions of buy, short sell. I'm gonna adjust. I use fib for my TPs, right? This is a perfect example. Perfect. So see how my stop loss is always 10 to 15 pips below the 78.6 for an uptrend. Downtrend is obviously going to be above it, so it's going to be up here. So the stop loss is 10 to 15 pips above for a downtrend. So you see how this is 22. Let's say 10 pips. So let's say 32. Let's adjust this to 332. So that's 30. Let's say 33 pips. Again, my TP is always the negative 27 or the next area of major support and resistance. And I'll show you this on charts as well. So you see how the risk to reward is 3.5. That's a very good risk to reward to take a trade on. I personally love to take trades between a 3 and a 4 purely because you don't want to be risking 100 pips to gain 100 pips. You don't want to be risking 100 pips to gain 150 pips. You don't want to be risking 200 pips or 100 pips to gain 200 pips, which is okay. But again, a risk to reward above a 3 is very good. If we aim to buy up to 50, same stop loss, same TP, you see the risk to reward, a 2, which is decent. It's not too bad. I have taken trades off that before, but I'm very cautious in how I do it. Again, 38.2, all risk to reward, 38.2. Same TP, same stop loss. And again, you see the risk to reward is 1.3. Isn't even bother looking at, if I'm honest with you. Because you're risking 64 to gain 86. It's not the best. You'd rather be risking 30 to gain 118, 120. Again, for more of the swing trades, I do more 50. When I swing trade, I'm trying to catch 300 pips, 400 pips. My TP, my stop loss, sorry, is normally around 50 pips. Gives it a bit of leeway. Again, just think about real risk to reward because that's purely what Forex is and how you compound accounts, all this good stuff. So again, this is why I aim to buy between the 50 and 618, purely because good risk to reward. Just think risk to reward. Just think, is this trade a good risk to reward? Am I comfortable with risking 30 pips to gain 40 pips? Not so much. Am I comfortable risking 30 pips to gain 200 pips? Yes, I'm perfect. Perfect. So again, this is why I use fibs for my TPs. Let's just leave this right now. So again, let's get back to this one. So you see how right now we pulled it from the high low. What's the rules? Think of the rules. High low to high high. So here, this is the high low. This is higher than the previous low. And we got the high high, which is higher than the previous high. Makes sense? And that's the high low. Again, if this is pulling back, where would we pull fib from? We will pull fib from this low, this high low, to this high high. And again, we aim to buy in this region. Purely because risk to reward. Just think risk to reward. 71 is a more of a wick entry. So sometimes you'll see, for example, I'll try and draw it. I'm not the best at art. So I'll try and draw it for you guys. So say, for example, right, it breaks past the wick. This is the wick. Say, for example, it breaks past the 618, right? You put a buy limit. Try and do buy and sell limits purely because it's the best way of trading, personally. I found out when I was trying to do a lot of buy and sell by markets, it didn't work as much. Although I'm on swipe trade trials at the moment, I have to constantly doing that. It's out of my comfort zone. But you get, again, your comfort zone is your danger zone. So it's always good to learn more stuff. So buy and sell limits is the best way, personally. A lot of the good traders use it. Sometimes when it breaks past the 618 and it's meant to retrace around this area, but it's just been overshot, the wick will normally be pushed down to the 71. So that will be more of a wick entry. Again, it's up to you whether or not you're going to have that level or not. It's just how you feel comfortable. So you see how this is real basic, right? Let's do downtrend right now. Let's just do a quick downtrend and we'll get onto the actual charts. It's better to see it on the chart rather than just trying to show you real basic, not as primary school. So downtrending, right? So we've got the pull down, the impulse move down, the pull back, impulse move down, however long it is, pull back. Impulse move down. I'm never good at drawing pull. Never good at drawing downtrends for some reason. Again, circles. You don't have to do it or not. It's up to you if you want to. But this just makes a lot of sense to me. So again, with fibs, right? What's the rules of fibs? Think of the rules. The rules are lower high to lower low. So I always got confused with what lower highs and lower lows mean. Think of it as this. On a downtrend, right? You're an L. You're taking an L downtrend, L downtrend. Just think of that. So you think of the lower high because the L is first, lower high, so lower low. Uptrend is the higher high because it's making highs, right? This is making lows, this is making highs. So lower high to lower low. Uptrend, for example, we'll make the higher low because it's higher than the previous low. I'm not very good at art, bear with me. And then we've got the high high. So that's how I really see when people say high highs and high lows. So I always got confused when I started out. I was like, what does that even mean? And again, I was obviously trying to use YouTube. But again, just think of the rules. The rules will help you out. So you see how right now, what's the rule? Lower high to lower low. So let's do it. Lower high to lower low. And again, what's our golden pocket? Golden pocket is the 50 to 618. Sometimes it is the 71 to 618. You just got to be looking at the trend at the time. Sometimes you know that it's not going to retrace off the 50 because it's pulling back so sharply. You know it's going to come between the 618 and 71. Sometimes it does come to 78.6. You just got to be very wary. You know that if it's still pulling back, right? It's still pulling back forever. It's still pulling back like really sharp, right? You know that it's broken past. You know it's going to maybe a trend line like this. Again, I'm not the best at drawing. Maybe the trend line's here. You know it's going to come and retrace the trend line, right? So it'll hit the 78 and then retrace. You just got to be aware of where your trend line meets up with your fibs. That's a whole different type of webinar. I have gone over that very much so of how I correlate trend lines and Fibonacci and stuff. But that's just a whole different little lesson. So again, we pull in it from the lower high to lower low. And we aim to sell off the pullback. So you put a sell limit right here because the price will come up, hit your sell limit, and then boom, shoot down into profit. And then obviously your TP is what? Say you enter on the 618. Let's say our stop losses. This is obviously a bad example right now, but obviously your stop loss will be around 30 pips or so, purely because I'm not the best at drawing. That's why it looks very weird. And your TP will obviously be here. Again, if you were doing it how I say, 10 to 15 pips, 20 pips right here, see your risk reward is free, which is good. So it just depends on what type of time frame you're doing it on, because obviously the lower time frame, the lower your stop loss is and the lower your TP is going to be. I'm a 4-hour trader, so my stop loss is normally 35 pips throughout the board. And then obviously sometimes 40. I've started to use 40 because I'm more of a risk taker. And then obviously my TP is normally around 150, 200 pips, 250, 300 pips, depending on what the market's saying, et cetera, et cetera. So let's go onto the actual chart right now, purely because it's all good seeing it here, but seeing it on the chart is a whole different story. So let's just get onto actually doing it onto the chart. Just delete all this stuff here. Cool. Right. So Euro USD right now, I'm actually looking to buy. I'm actually in a buy right now. It's only about 35 pips in profit. This I did send out to swipe trades, swipe trials, and that did hit the TP of 40. Because with swipe trials, they require you to have a risk reward of 1. So again, I'm obviously aiming for 200 right now. And this is a correlation of different stuff, measured moves, retracement of a trend line, previous highs here we were tracing off, and these will be next resistance points. So again, see how this Fibonacci is -27 matches up with this nice zone. So again, you're just correlating all this good stuff. So see how right now, this is obviously a bad example because we have a shift in momentum and all that stuff. Obviously, it's a completely different trading style. So I will show you a different example. USD shift, perfect example. This is the trade I'm actually looking at. Again, you see how the risk reward is about 5, which is obviously great. You don't always get that. My risk reward is in between 3 and 4 normally. But obviously, if this is more of a swing trade, we're going to be holding this for a week. Obviously, if you do 3 of these trades in a week, wow, just think of what your Met trade will look like. Again, it's just completely up to you how much you want to risk. So how with fibs, right? So let's just delete this fib and let's just delete this fib for now. So you see how right now it's downtrending because it's making lower highs and lower lows. So this is the high, this is the lower low, lower high, lower low, lower high, lower low, lower high, lower low. So now you see how fib gets involved. So with this, right, what are we drawing it from? We're drawing it from the lower high, right here, the lower low. And again, that was a 38.2. I was hoping for more of a 50, but then I realized that the trend wasn't going the way I wanted to do. Because say for this was trending all the way up, this would have hit between the 50 and 618, which is our golden pocket. Obviously, it wouldn't have put a sell limit right here, purely because the price probably wouldn't have hit that. Maybe the wick would have, but I didn't want to take that risk of losing the trade or missing out. So I would have put a sell limit at the 50. I wouldn't mind a little bit of a drawdown, and then obviously we'll switch straight in. But you see how right now it broke down. So if it was trending, it would have came all the way up, but it just shot down. That was probably news. So again, you know it's going to pull back. Probably isn't going to come back as far. Maybe make a double top, which it does here, which is Ismail's favorite type of trading. Again, 38.2 and then more. This is, I'm aiming for a 618 retracement on this one, purely because this fib, right? Let's draw a fib for you live. Draw a few. So you see how right now, you know, this is the lower high. Okay, cool, it's made the lower low. So now what do you want to do? With rules of fibs, what is it? Lower high to lower low. And again, we're aiming to buy or sell in this example in this, this pocket right here, which is this 618. And obviously we have some MACD divergence as well. And obviously you see how this is all angling up. This is all angling down. This is low and this is high and that's low, that's divergence. Again, that's how this is just extra confluences with your trades. You don't have to obviously use divergence. You can if you want to. So you see how right now, this is very basic. Lower high to lower low. Let's look at another example. GBP AUD is a perfect example. GBP AUD, see how I used fib. We're catching all of these moves. These are like 200, 300 pip moves. Again, very basic strategy. Trend line, fibs all meeting up. So you see right now, what is it? Let's look at, you see how I draw the circles? We're mapping out the charts. So you see how right now, we've made it's still a downtrend until it broke past here, right? It broke past here and now it's an uptrend. So you see how right now, this is the higher low, this is the higher high. What's the rules of fib? We pull it from the higher low to the higher high. And again, our golden pocket is right in there. That's 618 to 50. But obviously it broke down between the 71 purely because of how down hardly selling this pullback was. And obviously if you put a buy limit right here, you would have switched straight into profit. So you would have had a tiny bit of drawdown because of the wick. Okay, that's quite a lot. But again, you would have had your stop loss quite large on this trade, purely because this is more of a swing trade. So you just got to be wary of what type of trade you're doing. Obviously, I would be very comfortable doing that because of the risk to reward. Let's say you bought there, TP is all the way up here. That's a lot of pips, right? That probably would have hit your stop profit. Doesn't matter. If we've done, obviously, again, I said that the negative 23 is an institutional type of TP, and see how that hits straight into that negative 23. So you just got to be aware of what type of take profit you want. I personally like the negative 23. negative 27, sorry. But the negative 23 is obviously a good one to think about. But just be wary. So you see how right now, okay, cool, we've caught this move. It's made a high. What we're expecting now, we're expecting another higher low. So again, Fibonacci, where we're pulling our fib, pulling it from the higher low to higher high. Again, 618 retracement. But obviously this came down to 71 purely because it wanted to retrace off this trend line. So you see how now, obviously I'm not going to explain it right now because this is just purely understanding fib. But again, just got to think about what type of trader you are. Are you a 4-hour trader? If so, just think about, we're not thinking about these waves. If we pulled it from this, so here, that still would have hit 71. But you don't pull it from like here to here. Think about the wave. This is a wave. This is the pullback. This is a wave. This is the pullback. So just think about it as waves. That's how I think the trading as. I don't see it as candlesticks. I see it as waves. So again, I just got to be aware of what type of trader you are. If you're a 4-hour trader, great. Just stay on the 4-hour. Don't drop to the 1-hour because that's when you start confusing yourself. And that's when you start obviously losing trades and it's not great. Again, let's show you a downtrending example. Cool, perfect example. See how right now we do our circles. High, high. We've got the lower high, lower low, lower high, lower low. For example, if we saw this, we know it pulled back, right? It made the lower high. We know, okay, cool. We've made the low now. What we're expecting, a lower high and then a lower low. And then obviously this came to retrace the daily trend line, which was here. We pulled our trend line from all the way from these wicks up. It would have came down and retested it. But again, you just pick that up as you go along. See it's downtrending, lower high to lower low. Think of the rules. Boom, 50 to 618 is our golden pocket. So again, this is our golden pocket right there. So if you put a sell limit on the 618, that obviously wouldn't have come up to it, but at least you now know that you're using Fibonacci perfect. And this is when you start to see the results. This is when you start to become happy because you're getting good MetaTrader results, and et cetera, et cetera. Let's look at some more examples. How very basic this is. Fibonacci seems complicated until someone explains it. So again, let's do our circles. Perfect example right here. Put the lower high, put the lower low, lower high, lower low, lower high, lower low. Let's see all these are lows. So again, if we use our fibs, right, what is our rules? Lower high, the lower low, and again, 50 to 618. Lower high, lower low, again, 50 to 618. You see how this is so consistent. Sometimes it retraces off the 38.2, sometimes it retraces off the 78.6, sometimes it retraces off the 23.6, which obviously is a whole different type of trading. You don't need to worry about that as much. The main ones we're focusing on is, remember, risk to reward. Does that make sense? So again, if you do have any questions, just message me or message your upline. This is a very basic strategy. This works. A lot of traders use it. Krista Terry uses it. Starboy uses it. All these efficient traders understand fib to its highest potential, and you see the results they have. So again, hopefully this makes sense. Downtrending as well. See how I'm making lower highs and lower lows. For example, we know that that is a low. Where we're pulling it from wick to wick. Just remember that, wick to wick. Wick to wick. You would have put a sell limit at 618, but you had a little bit drawn and that doesn't matter as much, and then boom. Would have swished, hit the negative 27, and that is a lot of pips. Obviously this is GBP, so it's just a hell of pips. Again, if you're using like NZD, USD or whatever, you just got to think about the pips and risk to reward. Once you think about all that, you will see the results, I promise you. So again, have a good evening, good night, good morning, whatever time you're watching this. Hopefully this makes a lot of sense. It literally just comes down to practice. So the more time you actually learn fib, the more time you put into hours into understanding it, the better, and then you'll start to see the results, I promise you. This is obviously taught in IML Academy. So again, you can go over that if you're still confused. It literally just comes down to the more time you put into it, the more you'll understand it. And from there, you'll see the results. You'll be happy, and boom. From there, it's just a takeoff zone. Make sense? So again, have a good morning, good afternoon, good evening, whatever time you're watching this. And I will see you soon on the next webinar.